What's good, everybody? Welcome back to the B23 Financial Academy. We hope all of our videos have found you well thus far. We hope you've gained some sort of value, you've learned something new you did not or may not have known about Forex. As we move forward in our Forex journey, we will cover a very important section or segment in the financial market as a whole, which is trading systems and the concepts of signals. There's a lot of misinformation out there regarding what signals are, what trading systems are. So in this video, we will try our best to explain them and to properly detail and explain how they apply in the Forex markets. So without any further waste of time, let's get started. Grab a book, grab a pen, or record the session if that's how you best retain knowledge, whichever works best for you. So what is a trading system? Simply put, trading systems are methods of trading an individual chooses that works best for him or her, and can either be purely technical, purely news-based, or fundamental, or a combination of the two. It just depends on which you prefer or what has worked best for you in the past. For technical trading, one may use the indicators found on the MetaTrader 4 app, either on your phone or laptop or desktop, to create their own trading system, or simply use pure price action as their trading methodology. I will show examples of this on a live chart once we are done with this session. So it just depends on what works best for that particular trader, because we are all different. Some prefer fundamental, some prefer technical, some love indicators, some don't. It just depends on you. It's a personal preference. But in all of this, the key is consistency. More specifically, consistency of thoughts, of application, and execution. I'll explain this in more in detail in the next slide. So we have consistency of TAE, which is thoughts, application, and execution. So thoughts. When preparing to enter your trade, you need to make sure that you are in a sound headspace, very important, every single time for every single trade. If on trade 1, you are in a sound headspace, you are happy or you are calm, but on trade 5, your emotions are all over the place, it's best not to trade because you'll make unnecessary errors. So you need to evaluate your emotions beforehand. If you feel sad or depressed before you put on a particular trade, rather leave it. There'll always be another one. Excuse the typing errors here. I will correct this before I send the videos out on the Telegram group. The link will be shown at the end of the slide or these slides. Then we have application. You need to understand whether or not your trading system is congruent with your lifestyle and psychology. By congruence, I mean, does it work with you? Does it work with your lifestyle? If you work a 9-to-5 job, it doesn't make sense having a trading style that requires you to constantly check your phone, because you simply don't have the time. You need to find what works best for you with your lifestyle and your psychology. An example, if you know you are an impatient person, it does not make sense to use a trading system that requires you to hold your trades for days or weeks before you have the profit you desire. If you know you love quick things, if you know you love the lottery, then stick with a trading system that is quick. But as you know, easy come, easy go, just depends on you. That's how that goes. And then we have execution. So once you have identified your preferred trading system, execute every trade flawlessly. Don't change your winning formula because of the few losses that will always be there. Each and every single trading system has and will have its losses every time. There's no trading system that is 100% accurate because the market is very dynamic. Nobody knows what's going to happen next. You should just make sure your trading system works for you and gives you more wins than losses. I'll explain that in the next slide. So let's get into the concept of a signal. A signal is basically a notification from your trading system that tells you something may occur in the market soon. It is not a guarantee. I repeat, it is not a guarantee. Nobody knows what's going to happen next. Nobody and nothing can predict what will happen in the Forex market. Signals just tell you to get ready for something to happen, and they will either be accurate or inaccurate on a trade by trade basis. If you pay for signals wherever you get them from, you need to understand that they will not always be accurate. Sometimes they'll be accurate, sometimes they won't be. You cannot then blame the people or the person who gave you the signal because they don't control the market themselves. So you need to understand what signals are before you go and pay for them, because that's what most people do nowadays. So the key to all of this is right here. Does your trading system or your signals give you more wins than losses over a series of trades? If you get 10 signals, do you win 7 and do you lose 3? Or do you win 3 and lose 7? It doesn't really make sense if that's the case. You need to find a trading system, or you need to get signals that give you a higher win ratio over losses over a period of trades, certain period of time. Not one trade, not two, not three. Let's say 20. Over 20 trades, you may win 13 and lose 7. But the bottom line is you'll have more wins than losses. And also, when you are wrong, and you will be wrong, is your risk management good enough to preserve your trading account so you don't have to fund it constantly? Meaning, whenever you get a signal and it does not turn out to be accurate, does it blow your accounts? Or is your risk management to the point where even if you lose, you can still keep your account balance sound? That's the key to all of this. So we're going to switch over to our MetaTrader 4 charts. Then I will show you the different types of trading systems you may adapt or adopt depending on what you desire or feel is right for you. But before we go there, here are our contact details. This is our Telegram link. The PDF that we went through here will be provided on Telegram. And for any serious emails regarding paid lessons, you can just contact us on this email address. But without any further waste of time, let's switch over to the live chart. So now we're looking at Euro AUD, which is the euro against the Australian dollar. I'm going to switch time frames to 4 hours. Then let me just delete this. All right. So firstly, we're going to go, or we're going to try to build a trading system regarding, let's just say, support and resistance. Normal support and resistance. All right, I'm just going to draw horizontal lines where the market has touched twice or more, and then I'll explain that. Just give me a second or two. Okay. This will be a pure price action example. No indicators, just a chart and horizontal lines, maybe trend lines as well. Okay, so say now we want to build a trading system, right, regarding supports and resistance. Actually, let me do that. Okay. One, we would see we have, okay, sorry about that. We would see we have, okay, we have a touch here. Price came to this price level, which is 1.58136. At some point in time, price came to this price level, and then they touched it again. They could not break through it. Let me just change the color of the arrows here. Price touched this price level at least twice. So I'm just going to type this in here as resistance. Cyprus has resistance. All right. Price came here, failed to break through the level. Price went down, and now price went up, went up, went up, and then they touched this particular level again. So if we were to build a trading system around this, we'd say every time price goes back to resistance, the second time or the third time, we will look to sell it there with whatever stop loss amounts you think is good for you. For now, we can just use, let's say, 200 pips. So 58134 plus 200 would give us 58334. So let's see. Okay, it would be above this. Be somewhere here. 333 is about 199 pips. Still okay. So this would be an example of a trading system that we would never change. We trade support and resistance only using horizontal lines and a stop loss of 200 pips. So this is where we would have sold at this area, since it's the same area where price touched before. So if we would have sold here, we would have been risking 200 pips. And then let's say our take profits or should be about, let's just say 400 pips. Our TP is 400 pips. Actually, let's make it 500. $500 pips. So on each and every trade we take regarding or using resistance and support, we always risk 200 pips to make 500 pips. So on this occasion, if we sold here, we would have made that 500 pips easily. Now, let's look for an example regarding support. Let me just clear this. All right, here is support. Price touched at least one, two, three, four, five multiple times. Excuse me. Let me just switch time frames. All right. Say now you identified this area. Okay, price came down first time, second time, third time, then they went up. We had two touches here, so now you want to look to buy on the third touch. So the price level is 1.57268. If you deduct 200 from that, it should be 57. Let me just reduce that. 57068, somewhere there. We're using the same parameters we used for the first trade. Nothing is changing. We are consistent in how we think and how we apply the trading system. So our focus is here for now. We may have not seen this here. We may have just seen, okay, we're back testing now. So initially we might have seen this. We're like, okay, this is a nice support level. Price is going up. The next time price comes to this price level, we'll look to buy. And eventually they did. Our stop loss did not get hit. We would have had a nice buy trade here. Then price would it have gone up by 400 pips? Yes. So again, we would have been risking 200 pips. we've been risking 200 pips to potentially make 400, oh, 500 pips. So let's see if price indeed did that. Okay, on this particular trade, it only made 466, but then that happens. You may have decided to take profit at that level, or you could have waited for it to go further. If you did, price would have dropped back down to the same support area, but still, you'd still be in the trade because price has not yet hit your stop loss. So on the second time around, price makes about 1,000 pips on the second time around. But on the first time, it nearly reached our targets. But like I said, no one knows what's going to happen in the market. It's very dynamic. Sometimes your trading system will be accurate. Sometimes it won't be. It just depends on how it does over a series of trades. Because this was only two examples. We would do 20, but we just don't have the time for that. You can do that alone. You can backtest regarding this trading system or another one. You can look on YouTube for different trading systems. For now, we're going to do one last example using indicators. So let's use this chart. Insert indicators, trend, moving average. Okay, let's use 10. Let's make it dark blue, 10. Then 15 and 36. Okay, let me just change the thickness here. Don't really like it like this. So here's another example of a trading system using indicators. So we said we have moving average 10 exponential, moving average 15 exponential, and then moving average 36 exponential. So an example of a trading system using this would be whenever the moving average 10 and 15 cross or intercept moving average 36 from below, it is regarded as a sell signal. So if this were to happen, you would then sell here with whatever lot size you choose. And then we can use the same parameters. You sell at this point with a stop loss of 200 pips, which would be, let's see, 200 pips. Okay, I think around there, if I'm not mistaken. Oh, slightly higher. All right, somewhere there. So this is an example of a sell signal, and then same parameters, 400 pips, 500 pips, I mean. All right, price would have moved 500 pips on this occasion, somewhere here. And this would be classified as a successful trade. Okay, I think the 200 pips would be somewhere there. And then that's our risk. We're using the same parameters. Nothing has really changed. It's just that we're using indicators now. And this is just one of many systems that we offer. I think this is like system 10. Okay, it's ranked number 10 out of the 10 we have. I think we have 10 different trading systems, both technical and fundamental. And I think this is number 10, but this on its own, you can still make a lot of money regarding, excuse me, not regarding, it just depends on how your risk management is and how your psychology is. Trading psychology will be tier 1, and that's one video you definitely won't want to miss. So this would be an example of trading system or a signal. This would be a signal. It's highly possible that this may have happened, but then price could have shot up. I'll show you, I'm pretty sure there's an example here. Here's another example of a buy signal right here. Moving average 10 and 15 cross moving average 36 from below. So this is a buy trade, same parameters of risking 200 pips somewhere here to potentially make 500. They just made it with this candlestick. And then now let's see if we can find what I was talking about. Okay, let me just go back further. Oh, here it is. Here's what I was looking for. This is what I mean, or what I meant when I said every signal has its flaws. Every signal will have losses, all of them. Here we had, I think we can all see, this is an example of a buy signal, right? But then immediately afterwards, we had a sell signal. That doesn't mean the system doesn't work. It just means no system is 100% accurate. You just have to maximize the profits when you are right and minimize the loss when you are wrong. That's all. There's nothing really to it. All signals, all systems have their losses, they have their flaws. That's just how it works. Let's see. Here's another example. We had a sell signal here, but then buy signal just a few hours later. So let's see, we could have sold here around this area. Price would not have hit our targets for our profits. Then our stop loss would have been taken out, and then we would have a buy signal here. Stop loss 200 pips. Okay, here we would have been fine. But I think you guys kind of get the concepts. You see sell signal, buy signal, sell signal, almost buy signal. That's just how it goes. But when you are right, okay, regarding this system, especially when you are right, you can make a lot of money because it's a trend following system. There's reversal signals, then there's trend following systems. So yeah, this is obviously, like I said, I think it's one of the first systems we teach, but you make a lot of money using it. We do have other systems or trading styles that we have made, we have created, but obviously that will not be free. We will share more as time goes on, especially on the Telegram group. Make sure you get the link, you subscribe, both on YouTube and on Telegram. There's a lot that's on the way. So this will be the video for trading systems and the concept of signals. We hope we've tried our best to simplify it, to broaden your understanding and knowledge of how systems work and how concepts work. If you pay for signals, it's fine. There's nothing against that. Just understand what they are and what they entail. So please leave a like on the video, subscribe if you're new. It's been Mr. B23 signing out.